This pattern right here, RSI dropping under 40 on the 2-week chart, almost never happens. And when it does happen, it tends to show up near moments that decide the entire next cycle. The trap is that 90% of traders treat this like a guaranteed bottom signal. And that's exactly how they get run over. Because the real story isn't RSI is oversold. The real story is price is sitting on the 200 SMA area again, and the next few 2-week candles decide whether this is a repeat of a historical bottom pattern or a brand new kind of crash. If we hold this moving average and RSI starts curling back up, that's the kind of setup that can turn into a multi-month trend. If we lose it cleanly, this becomes the distinctly different scenario where the old playbook stops working. So in this video, I'm not here to hype. I'm here to map the evidence, then give you 2 clean paths, bull case and bear case, with simple if-then rules you can actually trade and manage. With that, welcome to Schooled by Market, and let's dive in. First, context. On the 2-week time frame, ETH's RSI almost never goes deep below 40. There were only 3 distinct times before, and now we're seeing the 4th. That alone tells you this isn't a normal dip. It's a regime moment. Think of RSI like the engine temperature of the market. When it's high, the engine is overheating. When it's low, the engine is stalling. And under 40 on this time frame is that rare moment where the market is not just tired, it's limping. Back in the 2018 bear, after the euphoric top, ETH went through a brutal unwind, about a 94% drawdown from peak to bottom, with price taking roughly 336 days to do that. RSI took even longer, almost 550 days from peak to bottom, showing that price can head higher despite momentum having already shifted. Then momentum stayed crushed. Stock RSI spent over 320 days sitting in the bearish zone. That's not a quick fear spike. That's a long, grinding winter. Then the next major case, June 2022, another capitulation phase after the 2021 euphoric run. ETH drew down about 82% from peak to bottom over roughly 210 days, and it ultimately based at the 150 SMA, basically the 300-week SMA. In 2018, the story was textbook boom-bust. Price hit an all-time high around January 2018, driven by the ICO bubble, and RSI was way above 90 at the peak, pure euphoria. Then you got a long unwind. RSI didn't bottom quickly. It bled for almost 550 days peak to trough. This is what people miss. The market can stay in a bear state longer than you think. That's why we're not using RSI below 40 as a buy button. We're using it as a pay attention. We're in the part of the cycle where bottoms can form. In 2022, you see the same general script, euphoria first, then a hard reset. ETH topped in November 2021, then sold off into June 2022, and the bottoming behavior aligned with that 150 SMA/300-week SMA area. Momentum stayed weak for a while too. Stock RSI spent about 180 days in the bearish zone in that cycle. That's still long, but noticeably shorter than 2018's extended winter. Now here's where it gets interesting. On the 3rd occurrence, the pattern compressed. There was no new all-time high in price, RSI only peaked around 80, and the whole peak-to-bottom sequence happened faster. Numbers matter here. RSI peak-to-bottom was about 400 days, still long, but shorter than the prior 2 cycles that took over 500 days. Price peak-to-bottom was only about 105 days, and max drawdown was around 66%. Less violent than 2018 and 2022. And the big technical detail, on this 3rd time, ETH found support at the 200 SMA, basically the 400-week SMA, and that's where it stabilized. So when you see price back at that same moving average again, you should treat it like a major structural line because historically it has been. So the storyline is, same genre, different tempo. The first 2 cycles were long, ugly, and highly volatile, while the 3rd looked like a condensed version, shorter duration, smaller volatility. That shift is the entire thesis of this analysis. And now we're back to today. RSI is below 40 again, and we don't have the benefit of hindsight. So we don't get to declare victory. We only get to measure probabilities and wait for confirmation. RSI under 40 on the 2-week is rare, and in the past 3 occurrences, when it dipped below 40 and reversed, it marked macro bottoms. But notice the condition. Not touch 40. It's go below 40 and then reverse. That reversal is the market telling you selling pressure is exhausted, and buyers are finally absorbing supply. It's like the car engine sputtering and then catching again. The stall matters, but the restart is what saves you. There's also a momentum clue. We have a higher high and higher low on RSI so far. This supports the idea that momentum may be shifting. Historically, when we see the RSI forming a higher high and a higher low after the RSI crashes below 40, it suggests that momentum is shifting from macro bearish to macro bullish. Here's the key. If RSI reverses in the next month or two, historically that has been a strong signal of a macro bottom. If it doesn't and the RSI goes on to make lower lows, then it would invalidate the prior assumption that momentum is shifting. And the second key, price is now back to the 200 SMA or 400 weekly SMA, which previously acted as support in the most recent occurrence. If that support breaks cleanly, this crash would be distinctly different from the prior patterns. But if we see the market continuing to respect this support level, then the odds of ETH repeating prior patterns would greatly increase. Now we plan scenarios because that's how you stay sane in crypto. 2 paths, bull case and bear case. Clear triggers, clear invalidation. Bull case. If we hold the 200 SMA on the 2-week chart and RSI starts to reverse up from below 40, meaning it curls back above that threshold, then the market is likely printing a macro bottom pattern similar to the past 3 occurrences. And if the cycle compression theory holds, that could set up a trend over the next 6 to 7 months, with a real shot at pushing toward a new all-time high. Your bull checklist is simple. If we close and hold above the 200 SMA, if RSI reclaims 40, and if momentum stops living in the bearish corner, then you stop trading fear and start trading structure. That's when you can think in phases. First stabilization, then trend, then expansion. Bear case. If we lose the 200 SMA decisively, clean break, no immediate reclaim, then we treat this as the pattern failure. In that world, you start looking down the ladder for the next major support, and that could be the prior April 2025 low of $1,400, or it could be the 2022 low of $1,000. To summarize, your 2 key references are the 200 SMA on the 2-week chart and the RSI 40 threshold. The bull case would be supported by the fact that the 200 SMA continues to hold as support and RSI eventually reverses above 40. In this scenario, we could see a new all-time high in 2026. If the opposite happens, be prepared for the bearish scenario where ETH could test $1,400 or $1,000 again. And your time window is the next month or two, because that's where the RSI reversal signal would show up if it's going to. History gives clues, not guarantees. The core idea of this analysis is that cycles may be shortening and volatility may be decreasing, and the current setup could be part of that shift, but it's conditional on holding support and seeing momentum actually turn. Now I want to hear your play. Are you buying this 2-week RSI under 40 setup because you think it's a macro bottom? Or are you waiting for confirmation in case the 200 SMA breaks and we get the flush? Drop your plan in the comments, bull case or bear case, and tell me what level would prove you wrong. Thank you, and I will see you in the next one.